Justice Brothers Tackle Trading, bringing you all the charts, the news, the analysis here on election day. We talked about the election in our podcast this weekend. Real fun segment. Be sure to check that out. As you know, one of the things that are going to be in focus tomorrow are who are the winners, who are the losers from a sector, from an industry perspective. And if you want to help navigate some of the chaos, we ran across a fantastic election day guide on Zero Hedge. It's pretty cool. It's pretty cool. When they say the complete election day guide, they're not underselling it. This is really, really cool. We ran across it, thought we would share that if you are like, I want to know everything I possibly could know about what's going on today from a not from a market perspective, pretty cool little guy. So be sure to check that out. Matt, markets on a technical perspective are holding that 50-day moving average, holding a support level, setting up. Now charts are going to look a lot different tomorrow, right? It'd be very surprising if we don't have a significant gap of some formation. But where are the charts as we sit today?
Battling against the 50-period moving average, combo 9 on the weekly chart. I mean, that's really the story of the week right now. And kind of, starting last week is when you violate a support level and you violate trend or violate pattern, it's really about understanding what builds next, not just what happens next, but what builds next, because you want to see not just a support hold, but you want to see a support build. And there is a fundamental technical difference between a support bounce and a support build. One just kind of hits a catalyst and goes up, whereas the other one kind of consolidates, really kind of tests that level multiple different times, and the more you test it, the more you strengthen it, and that's what happens when you violate a short-term support level and it comes down into a little bit more important of a support level. And so you're looking at the S&P 500 right now, and you're just kind of dancing that 50-period moving average. You come out to the weekly chart, kind of that 9 EMAs hovering right there with the price action as well. And so you're just battling at support, quite frankly. And that's what you wanted to see in the early start of this week, following last Thursday's shellacking in the S&P 500, is you want to see that 50-period moving average hold. We're holding so far really, really well. That was to be expected, however. That was kind of base case when we were dialing this in the newsletter, was that to hold coming into the election. And obviously we are here right now today. It is election day and we're sitting still at the 50-period moving average. Now, pattern wise, so that's support. But when you're looking at the pattern here, right now, yes, Mark, I fully expect this pattern to get violated later on tonight as you start to see an algorithm election move. And I want to be clear on that, because I do think algorithms will be going ham here later on tonight.
Mountain Dew markets, that is
I'm not.
You can make all the predictions.
Sure that's going to be the truth of the market until the cash open tomorrow.
Yeah, I mean, Matt, like all the predictions you make tonight, futures are going to be fun to watch.
Yeah, and usually on this, how my election nights go. On one screen, I have the election, usually CNN or switching back from all the major news like Fox and whatnot. And then on the other one, you have the futures market open, understanding what the S&P, and on the other screen, you have the gold chart, wondering what's going on with gold. And then so it's going to be a really fun night. There's no doubt about that. My general point is, algorithms in a Mountain Dew market, you can expect volatility here. What sticks, what is real, you're definitely going to want to see cash open to see how the cash open behaves tomorrow. But as of the pattern right now, I don't think you can look at the pattern right now in the market and say this is a negative thing.
Oh, no, not at all.
You got a little bit of consolidation, that goes a long way. We call this consolidation after a violation of short-term support. We call it a king's bed pattern. And as long as we're staying in that king's bed pattern, holding the 50-period moving average coming into tomorrow, you're going to be happy with the technical side of the equation. If you violate the 50-period moving average on a volatility event, it could be a little bit volatile for not just today.
Yeah, absolutely. In the midst of all the technicals, and obviously we will be there tomorrow, tackle today in our lounge, breaking down very important technical patterns. But while we wait for that development, a report that nobody's going to be talking about today, but it is a very important report. Matt, it is arguably the most important economic report of any given month outside of labor and inflation. The ISM services, because of the just the total impact services have in our economy. Blistering hot report this morning, highest
Yeah.
reading in a couple of years. This is going to get lost in the shuffle today, but it's going to be one of those data points that people remember down the road when you're looking at trends. Really, really hot number. Those growth worries that you had a couple months ago, they are way in the rearview mirror right now.
Yeah, nobody's concerned about the economy as we sit right now. But Mark, just a word on services, PMI number and why it's important. If you recall, just a couple months ago, as we were going into the coming out of the pausing cycle, going into the cutting cycle from a monetary perspective, I made the comment that these types of secondary reports, ISM services, ISM manufacturing data, become a little bit more important. Mark, do you remember in 2022 when everybody in the world was calling for the worst recession of all time? And I said there was not going to be a recession.
Yep, I sure do. It was a hell of a call.
One of the reasons, if not one of the chief reasons why I just did not see a recession was the strength of ISM services. People, when they look at ISM manufacturing services, labor, GDP, and all that, our economy is mostly a service-based economy. And at no point did we ever even sniff contraction territory on that side of the equation. It's good to see services start to pick back up. But services have been a strength ever since the pandemic ended. What we really need to see kind of happen on the economic side to really propel the growth side, and that is starting to little by little get there, is the ISM manufacturing side of the equation, which still does hover in recession territory, which has been the case for a few years now. But ISM services was a very big number here today and a good beat against expectation as well.
Yeah, we got a few stocks in the news. Earnings season. Once again, people forgot earnings season still going on and all the election craziness. A couple of things to report. Other news out of Boeing. What do you got for us today?
Yeah, we got a couple stocks in the news here today from an earnings perspective. Palantir, one of our awesome AI gold rush watch list candidates, Palantir, they're on the docket here today. You got Archer Daniels, which is a Tackle 25 stock, good cover call company. They're on the agenda here today. And then you got Boeing for, I believe, the third time in 3 weeks. Boeing's in stocks in the news at one point during the week because they have had that ongoing worker strike. And so on Palantir just came out with a good old-fashioned beat, a pretty decent report, talking fairly positive about the future as well. EPS beat by 10%, 9 against 10. When you're looking on the revenue side of the equation, revenue came in slightly above the expectation. Revenue did grow 30% year over year. That's a really good number, especially for Palantir, the government-backed company, growing 30% year over year, looking fairly good. And they also raised Q4 revenue guidance by 3%. And so not the biggest beat on EPS and not the biggest beat on the revenue side of the equation, but pretty decent numbers across the board coming out for Palantir. Going to give them the hat trick treatment on that, although that is a close call. On Archer Daniels here, they came out with the miss again on earnings. They were expecting about 23, came in at 103. Revenue came in at 22.25. Expectation was 23. Revenue declined 11% year over year. However, they did reaffirm forward-looking guidance. So definitely a mixed report coming out of ADM. And then on Boeing, like I said, just this ongoing worker strike has been really kind of impacting Boeing, but it's also kind of Boeing's representing to the market a little bit, because the worker strike was not just a Boeing story. It was a market story as well. And coming out and that worker strike kind of getting concluded probably has a little bit to do with the market being up right around 1% here today. Let's take a look at these stocks on a technical side of the equation. One of my favorite stocks in the market is Palantir. Love their CEO, have them on the AI Gold Rush. Tier 2 AI Gold Rush stock, one of the more important stocks in the AI marketplace. Palantir just they don't want to stop, quite frankly. Just an amazing trend, gap away from the trend. Typically, you got a little bit of consolidation at the top. Couple that with the intermediate uptrend, you would label that either a breakaway or a runaway gap. It really doesn't matter because the end result is the same. Further price appreciation. Certainly would love to see a secondary pattern develop around that $50 mark. So keep an eye on that as well. When you're looking at a little bit of an ADM here today, the gap down was real. Remember, a little bit of a miss on EPS, a miss on revenue, but they did reaffirm forward-looking guidance. That did not matter as ADM gapped down, but where did it gap down into? And this is something to keep your eye on. Gap down into $50, the exact same level Palantir is trying to break back up above. ADM gap down into that $50 number, which also has massive historical resistance. And as the old principle of polarity kind of leads us to believe, old resistance can certainly act as a new support level. Anytime you gap down like this, you're going to have the caution flags up, no doubt about that. But you like the zone at 50. It's a good company, great on the covered call side of the equation. But again, you never pick up a falling, you never just catch the falling knife. You got to let it hit the ground. You got to talk about reversal analysis first and foremost on ADM. And then when you're looking at Boeing here, Boeing's just kind of consolidating at the low point. I would put this in some degree of consolidation. I don't know if I would call it a continuation pattern or a reversal pattern, but that kind of makes some sense given the fact that it is Boeing here. But good to see that worker strike get done more so for the market than for Boeing. That's what we have for stocks in the news here today.
Yeah, no. And as we get to global markets, one of the things, when I was in the lounge with Greg yesterday, Greg, big commodity guy, and he was like, and I was like, oh, so Greg, post elections, what's the first chart you're gonna be looking at? And he's like, the dollar and bonds. Like that was like, it was like instant. It was instant. Yeah. Like he's like, it wasn't not the S&P, not an individual sector. It's like, I want to look at dollar and I want to look at bonds. I think he's not alone. These charts are going to have a lot of implications in various areas of the market, depending on their move post-election.
Listen, if post-election looks anything like the pre-election,
it'd be yes,
fantastic. I'm okay with this, right?
Yes.
You got a good turnaround story here, and that's a good thing when you're looking at the dollar. And Coach Greg's absolutely 100% right. Could not agree more with him. When you're looking at any major economic situation, any major political, any major geopolitical, any major situation that impacts our lives, it is dollar first and everything else second, because the dollar read gives you the read on everything else. The S&P read doesn't give you the read on yields, commodities. Like the dollar read gives you that understanding of the landscape of what of how not just the United States is seeing this, but the rest of the world as well. And so I could not agree more with Coach Greg. And you have a little bit of a turnaround story here. A high base, stop me if you heard this before. A high base that turns into a retracement is never usually the best thing. But when it catches the 9 EMA, it's even worse here, Mark. And it feels like you caught the 9 EMA here. Now, once again, expect algorithm moves here today or later on today going into tomorrow. The dollar's a 24-hour market. All commodities are. You can expect volatility here. But from a pure technical perspective, I got to tell you, I'm liking what I'm seeing on the dollar starting to show a little bit of fading at the top and starting to catch that 9 on the downside. So start to turn around a little bit better on the dollar. Now, on the commodity side of the equation, gold's still hovering there against that top pricing. Haven't really seen anything change over the last couple days, just a couple doji fest up there at the top. Gold's probably the number one thing that's actually telling the truth of the entire market over the last 3 days. Just a little bit of a doji fest. When you're looking at silver's trying to fight back and build that support level. But again, it does take a support build there. On the copper side of the equation, we got a trigger yesterday, got further continuation here today. And now you're up at 4.5, and 4.5 could play a little bit of a short-term resistance. But once again, you truly do expect a little bit of volatility everywhere, but I'm not sure I expect more volatility than in the actual crypto side of the equation, which if you'll remember back in the podcast, Mark, and definitely check out that podcast, ladies and gentlemen, from this week, the Trading Justice Election podcast. It was Bitcoin that was expected to see the largest differences between price appreciation and depreciation, depending on if it was a Harris or a Trump victory here today. And so you could certainly expect some fireworks here in the Bitcoin. So I don't think the technical side is going to matter. I think it's going to be about what happens after the election here in the crypto arena.
Yeah, absolutely. Listen, we'll have more detailed thoughts in the Traders Lounge. Obviously going to be there for our community each and every day this week, identifying those trends, those moves, those opportunities post-election. you can be part of that amazing community. Go to tackletrading.com, sign up for that 15-day free trial.